Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here. Pretty volatile day here for row crops after our WASDE report came out. Let's go over that quickly. It wasn't too bad or too surprising of a report. In fact, if you had considered just the corn side of the balance sheet here and the changes we saw, you might have actually considered this a pretty bullish report, especially if this report had come out this time last year, we might have, and for soybeans for that matter too, we might have, seen a 50 or 60 cent up day. But given that where we were in the charts, how we performed into them, the sell-off in oil and other outside markets could be exacerbating some of the downside pressure. And let's face it, even with the change in weather forecasts over last week, if that wasn't enough to excite these markets, this report obviously didn't do it. And we are left just in a period of price discovery where we usually see a selling pressure build into a period where we'll form a harvest low over the next month or so. So for corn, we came out with area planted at 89.9 million acres, area harvested expected at 81.89. Both of those numbers a little higher than our June report, but generally speaking, with an unchanged yield expectation, it's not going to do much to affect production here going forward, because yields will very likely walk down here for the rest of the year, as I do not believe that 177 bushels an acre the USDA is telling us will stick. One of the changes here, we did see a 70 million bushel build there in ending stocks for corn. No change in our exports, but domestic usage totals also being unchanged in this report. Kind of had a whole punt here for the corn balance sheet and today's report. So, okay, if that wasn't enough to excite the bulls, on the soybean side, real quick here, area planted coming in at 88.3 million acres. That is lower, and we did shave, 2.7 million acres off from June. And that area harvested coming in at 87.5 million acres, a significant drop there. No change in yields as expected, but we will probably anticipate yield adjustments in the next report. One of the big changes on the bean balance sheet was to our export number. We lost 65 million bushels there. But dropped 50 million bushels in our ending stocks. So kind of a weird shift on the balance sheet for our balance sheet, and citing there a change in a lower import number as well, with that lower production number from, of course, our from our area planted and harvested, those acres being lower reduced our ending stock. So this alone would have probably been a very bullish balance sheet if it had happened at any other time in the cycle and at any other time in the year. Particularly this time last year, we would have probably seen a rather large update. Now, the big reason I feel like we sold off here today, outside of like corn being, crude oil doing what it did and being down $8 or $9, whatever it was, is because we've just maybe had gotten a little too overdone earlier in the year. It was too far, too fast, too soon. So price discovery naturally now needs to walk back against those prices that we saw in May, June, July, into July, I should say, in late that faded off in that mid to late June period, and now we're in that period of volatile price discovery lower. Row crops led the way for the last 2 years. They started with the initial inflation rally coming out of COVID, and they're arguably one of the first, alongside crude oil, to walk back on those numbers, and for a period of price discovery lower now, are probably setting in and probably getting now too overdone to the downside, which unfortunately, and I hate to be the one to say it, we'll look at today how those numbers and how the price could extend lower, but we'll see what happens. Let's take a look at the daily charts here. And remember, trading futures involves risk and is not suitable for all investors. Everything I talk about here today is just my own opinion and not a direct trading recommendation. But I do urge you, if you want to take a closer dive into these markets, work with a broker who can give you this type of information on a daily basis. My number's on the screen there. Find me on Twitter, find me on Facebook, shoot me an email, dhussey@zaner.com. Would love to get you rolling and see what Zaner has to offer for you. Okay, so to begin with, I guess I have a chart up of feeder cattle. Kind of an interesting day for the feeder cattle. Real quickly, we broke out of a 3-month range here, started to break higher. We've got an open gap up here from February 28th up here at 182.90-ish. So getting back up to that level wouldn't be unexpected for the feeders. and given this 2-day rally, you expect 1 or 2 more days to take us up there. And I think the real, this rally exploded really after I think the market looked and saw how down corn was, and we realized that, oh, maybe we're a little too overdone to or it makes sense to come in and see feeders rally with corn being so weak. Somebody decided to buy a whole bunch of feeders and lock in decent margins. So the daily chart of corn is an interesting one because we kind of found ourselves in no man's land over the last couple of days. We're below the 100-day and 55-day moving averages, which are at 685 and 703 respectively. Unfortunately, it's looking like we're going to get one of those bearish crossovers. The 18-day moving average came in today as resistance up here around 650. Well, yesterday is 650. We sold off. We'll take a look at the levels around that level area here shortly. Depending on how you draw this trend line support, against the lows that led us up into this area, we are arguably fighting with trying to stay above it or break below it. That's that yellow line here on the chart, depending on how you draw it. But the moral of the story is that if we don't, get back above some of these key technicals like the 200-day moving average here at 618 and this trend line support, we run the risk of falling further and retesting back into the range from last year. Now, it's that range from last year that I want to call everyone's attention to. Starting in May and June, we basically went sideways all the way through September and October, where we started to break out for corn. This year, we may do the same thing. We might find sideways price action for the next couple months. And that means the period of price discovery lower might be over, and we might start heading higher. But after this big down day where we've erased pretty much all of the last week's gains, it's hard to kind of say that that's going to be the case. We did trade down to the 570 full 50% long. We'll take a look at that on the smaller time frame chart now, and then we'll go from there. Again, I say we're in no man's land here because we are neither overbought nor oversold on that daily stochastic RSI, so the market could go either way here, if I'm being perfectly honest. But I do fear we might have a downside move underway if we see follow through here in the near term. Now, again, I pointed out that full 50% retracement around the 570 area for December corn. That's just from its 670 low, or 369 low, excuse me, up to the 766 highs. Full 50% retracement got a reaction here from 567 there last week. We rallied up. We didn't quite make it into the full 50% short. That's highlighted now. From the 766 and a quarter high to low. We also didn't get up to fill that gap at 763 or 730. So we do have two open gaps above us, which I find very interesting. And arguably we had a gap down here at 586. Go down to a 15-minute chart. You'll see what I mean here, that I think we just kind of came down and filled. It was a tiny little gap right here between the close on 7.6 and the open reopen on 7.7 and that Globex open. That gap was left open by one tick here at 586 and a quarter. Interesting that we kind of came right down into that level here today to fill that area on the chart. And I hate these levels, but it is sometimes a level that an algorithm is attached to. We had extended or extension shorts, I would say, drawn from lows to lows. You might have gotten aggressive and started seeing the 611 to lows. After we, started trading higher and broke those levels, we never really pulled back into a full 50% retracement. And this entire decline might have just been a move down into this old ambush long as support. It's not a level I would buy, but if it holds, okay, it's got justifiably a level that we're in. But my problem now is that we really haven't traded into this full 666, 38, full 50% short off the highs. It was front run there. The market did gap up and then fade that gap lower. And we ultimately seem to have found this old area congestion was support. Now it's resistance on the way back up. It was resistance once before here at 645. But, I hate pointing this out too. Left shoulder, right shoulder, and a big head with a neckline at 566. To me says that if we break down below 566, I do think we'll be potentially heading significantly lower. Probably test of the $5 handles in the works. Maybe even down to, the lows of last year here in April through July. around the 460 to 480 area. But I do think that would probably be as low as this market could go, given the situation we have with weather turning hot and dry into tassel and all that good stuff. So we'll see if that comes to fruition. But as I was pointing out earlier, this range that we had from 535 down to 464 last year in December corn. This was, of course, December 22 corn last year. December 21 corn had a much wider range at that time, but was still relatively range bound. We might be setting up into a range just like that here this year, which would mean that probably between 560 and $7, 680, somewhere in that area, we'll probably bounce around and try to fill these upper gaps in choppy price action up to 730 and 673 over the next couple months. And then, into the end of life for December, we might see that push towards 8 and above. But again, we're into weather markets here until I think we get even hotter and drier forecasts. I think the market was thinks it's perfectly acceptable to have $6 to $6.50 corn being priced as it is. But I would say, with the current balance sheet and the way it looks for corn, one might expect pricing for corn to be more around the 520 to 480 area, not, $7 or $8, just based off the balance sheet alone. Everything else in the broader inflation trade is what I think drove us up to 766, but we've seen a lot of that unwind, and we can't ignore that, even though people don't like to admit it. It's what the chart's doing. It's what price is doing. And we can argue about it on the internet all we want, but at the end of the day, the market is always pricing how the market is going to price. With all that being said, though, I don't think we're out of the potential for the market to trade back to 680 and 730, but it's obviously got a lot of resistance to chew through. On the smaller time frame chart here, we pretty much just came straight down for corn. We did arguably trade a little bit of a trend here. The first little 50 back here occurred around the open there up into the 645 area. It went down to targets at 626, next in the series from entry high down to target low. Again, here traded down to and through its targets. The next in the series, entry high to target low. Resistance again being front run by about a penny each time. Then really just started to break down, because at this point we no longer really, I guess you could make an argument for one there. This is where you could take the trend in one of two ways, or go think low to lows extensions. But I do think we need to see the market back above $6. And the last one here was right. That's where we got to now actually go low to low again here. So maybe some resistance at 592 to 594. Back above $6 is the break that I'm looking for to potentially take the market higher. And then again, we need to be on the lookout for a move back up into the 620 to 630 area for the full 50% retracement short off of this high. Even though we didn't trade up to 666, and I'm hoping that we can get all the way back up there. If you haven't done so already, maybe you already have long calls or long call spreads like some of my clients do. On this bounce higher, it might, definitely is an opportunity to get some sales done. And any move higher that we see in corn, we're going to be looking to position with puts personally for clients on a move higher, because we've already got some long side exposure that we can manage that we put on last week. Into the start that first week of July. Woulda, coulda, shoulda taken profits here on Sunday night, but who would have thought in a 2-day period would have erased all that really quickly. But if we see a sharp snapback, the first resistance is up into $6. The next resistance after that's around 620. But really, I would love to see us get all the way back up to the highs of the month. And as volatile as this market's moving, anything's possible right now. So, but if we do go up there, I wouldn't be a seller in the futures, but only for hedging purposes. Because again, if we're going up there, it's probably on the back of some kind of hot and dry forecast and weather markets in a year that, if exports pick up, given the strong dollar, that's going to be tough to do. It's something to consider. All right, so our daily technicals here for soybeans. November beans here have been flirting and flopping around this 1377 200-day moving average. We broke below it, came back up, we broke through it again, we came back below it. So it's just chopping around the 200-day moving average. We filled the gaps on this chart. There is still, gaps above us. We'll talk about up at 1538 in the next, when we look at the smaller time frame. 18-day moving average here yesterday coming in as resistance at 1433. So again, that's going to be a key level to have to overtake for the bulls to ignite some technical buying. And that 55-day and 100-day moving average coming in around 1489 and 1481 respectively is getting really close to a bearish crossover. Not something we like to see. Daily stochastic RSI is in the middle of the range in no man's land, so we might have some sideways price action here in the near term. And again, just like our corn market, that sideways price action from May through November of last year, maybe that's what we're setting up into, a big old range. Gosh knows the volatility of the last couple of days. If we could at least call this the start of a range-bound price action, I think everybody would count that as a win. Because the other alternative is us heading lower and probably in a very real nasty way. I'm here to present all of the sides for every opportunity. I'm not giving a direct trade recommendation of what you have to do here. I'm just trying to call out the big levels as we see them and what each side would be looking for, or what you can take away to look for as, in other words, tracks in the sand as we track prey. Whether you're bear or bull here, you're going to leave tracks in the sand, and we're trying to figure out where each side puts those tracks and then discern where we go from there. The 1329 next in the series, or 50% area that we kind of found. It's a big level. Last year we held this, arguably a range from that extension long. We went up to and through targets, but same anchor, new high. That would be the 50% level that I would justify had held on the pullback here. Clearly got a reaction, but it got a reaction up into the 50% short that we'll talk about here in a minute. We basically traded down into the cluster of old highs that we found from last year, traded that as support, so broken resistance, now a support, very much like corn. Makes sense why $13 in that area held. The issue here is that on the subsequent rally afterwards, we found resistance back into this old cluster of lows, broken support, now is resistance, and it happened to be a 50% level from highs to lows here, a 50% short from the 1584 high down to the 1302 low, was right at 1443, and the level that we pretty much gapped up into this to start this week. That was a kind of a tell, I guess you could say, from the market when we turned red yesterday. And then actually, when you break down the 4-hour chart, beans have actually been pretty technically sold off that high to start this week. We had open gaps all over in here that are all now closed. The only open gap I see on the beans at this time is up at 1536. So, that is promising for the bulls, and maybe a reason that we'll be more range bound and find our way back up there to fill the gap. But, are we going to beans to 18 before we, I don't know, right? We can't be talking about that just yet, even though there's some interesting dynamics playing out that could lead us there. All right, so coming off of this high, 50% short here on Monday traded, held the 61 land here up into 1425. Arguably, we traded it again and held a second test of it there into 1420 on early price action there on last night. Then the market just sold off. We went down to 1369 lows. Could draw up low, the high to low there, but the level that it becomes because we extended here, to me, is a low to low extension. Into the bell this morning, we traded up into and held the 1389 618 line. Again, 1385 being that next in the series, 50% short. Went down to and through targets. Again, another extension through levels. Now, there was a little bit of a micro trend here, 50% level that held there. And then the market extended. Well, you could argue another 50% and a 50% inside that. That's great. But the bigger level now I would expect is this from low at 1369 down to lows. That's the level that if it breaks now, basically 1360 to the upside. If that breaks, and of course that's going to adjust if there's a new low made and what have you. But if we break, hold the lows here, or maybe only go a little lower, basically back above 1360, I would maybe start considering small ambush longs off the low for a potential reversal higher. Unlike the corn, which didn't really have a 50 back off of its lows, the beans actually did have a bit of a trend here that traded. But as you can see, well, there was let's look at the uptrend here. A 50 back here into the 1323 area, went to target, next in the series trades. Pulls back 1389, get rid of that original one. Goes to targets, next in the series from lows to high. This is all just 2 steps forward, 1 step back, blah, blah, blah. So we trended higher there for a day and took the trend higher. We also broke full 50% shorts off of the highs. This 1506 high to low, right? Up in that move up to 1435 actually broke that level, okay, of that swing. And this is a big reason why I think we might have sideways price action. Then we broke the 618 line from the low to the high. So when you have this double 618 line break and it's a level, it's a means that we looked at before, we might just continue to whip around inside of basically a $14.40 to $13.40 range for a little bit. And that's going to be something that, I'll probably be tracking a little bit more than any kind of trend here in the near term. But again, I am concerned because of the full 50% short off the high here from 1584 to lows at 1434 could have traded and held. And again, that's the full swings 50%, because off that high, we had another 50% that traded from entry highs to target lows. And the next in the series is that level I'm mentioning that failed out here. Now, once that level failed here in the 1435s, and we talked about last week that if we got up there and went through it, we might be looking for that ambush long. Well, at the very least here today, that ambush long, which would have been drawn from last week's swing low at 1302 to highs, at least that level at 1370 got this reaction here. So that's the other, while we rallied up into a extension short off the high, we did also get a reaction off the 1370, almost to the tune of 20 cents there before the market broke down and went through its 618 line. So the market's being technical. It's trading both sides right now. We're seeing algorithms that are attaching themselves to both long and shorts. What it's not trading is fundamentals. Nothing about the report today from the USDA or weather says that we should have sold off from 1440 down to 1340 in soybeans. I just don't agree with it. But unfortunately, there's a technical trend going on here, and these are very, very technically traded markets right now, and I think that's what's driving price action. So paying attention to technicals right now is kind of the way to go, in my opinion, and I do think we will see, weather markets prevail and fundamentals prevail here, but we're certainly at a time of the year where there's a lot of other things going on. We typically already find a seasonal top. That means now we go down to find a seasonal low and into the harvest time frame, find a bottom on these charts at some point here, which I'm not giving up that the lows we held last week are going to give way, but the signs are pointing that if we do get down there and start to go through, we could go significantly lower. And for the soybeans, that might be meaning testing down towards $12. And certainly if this 50% short off the high from 1443 goes down to its target of 1235, that's another dollar lower that we can't just be long and hold on for, right? So objectively looking at these markets, we have to realize that there's two sides to the trade. No matter what side we feel is right, the market is going to continue to trade how it trades. So with all that being said, thank you for joining me today for this Strategy of the Day update. I do urge you to please check out the links in the comment section and the information section of this video to sign up for both either the Zaner Ag Hedge daily newsletter or join me every Thursday at 2 p.m. Central for the Strategy of the Week webinar, where I cover all of these markets and in more detail. We go over pretty much everything and anything that's moving big at the time that we want to take a look at. Shoot me an email, dhussey@zaner.com. Give me a call, 312-277-0110. Find me on Twitter and Facebook. And, of course, sign up in the links below to hop on our newsletter or join me for our Strategy of the Week webinars every Thursday at 2 p.m. Central. Have a great day, everybody, and we'll be back with you as price action develops. Take care, everyone.